Good evening. Thanks for joining us on this lovely Friday evening. Top stories today. The American job market continues its recovery, but at a slower speed than last month. Unemployment down to around 10%. So the job market and the overall economy is recovering. Is a new stimulus package even necessary? We asked an expert. U.S. regulators want to crack down on U.S.-listed Chinese companies. They're calling for new rules to make Chinese firms comply with U.S. audits. And President Trump sanctions Hong Kong leader Carrie Lam and 10 other officials for undermining Hong Kong's freedom and autonomy. In markets today, a slight correction in tech stocks. Shares of Amazon fell 1.8% and Netflix slid about 2.8%. Microsoft, Apple, and Alphabet all closing lower as well. As I mentioned, shares of Chinese companies falling today after the Treasury Department recommended tighter oversight. Patrick Hayden has details on that later. Utilities and retail, they're up. We have some details on Zillow's recent success later. All in all, the Dow rose about 46 points or 0.17%. S&P 500 gained 2 points or 0.06%, and the Nasdaq dropped 97 points or 0.87%. And would you believe, despite record unemployment, record number of people facing eviction, and dismal company earnings, the S&P 500 is now only 1.5% of a record high. Interesting times.
Friday's job report showed that the U.S. economy added nearly 1.8 million jobs in July. Economists predicted job gains of 1.6 million, so the Labor Department figures were better than expected. Still, July's job gains fell far short of June's 4.8 million increase and May's 2.7 million gain, as the economy surged after the lockdowns. Now it could be losing some steam.
Yes, the report this morning is just another proof point in this roller coaster of an economy that we find ourselves in. It's a roller coaster recovery characterized by highs and lows that often change overnight.
July's job gains indicate that only about 40% of the jobs lost due to the pandemic have come back. Still, some economists see encouraging signs of recovery.
We track job demand daily, and employers are increasing their demand for new jobs in our country. So we're on the right path, and I think the report shows that.
Other jobs data released this week showed that the number of people collecting unemployment benefits rose mid-July to over 32 million. Many economists say the tens of millions of jobless Americans underscores the need for another aid package. The White House and Congress are working on the next wave of relief. They're still trying to strike a balance between Democrats' $3.4 trillion package and Republicans' $1 trillion proposal.
The Treasury Department is recommending that Chinese-listed companies on American stock exchanges should be held to the same auditing standards as American companies. Believe it or not, Chinese companies don't have to show their audit books to U.S. regulators. The department says any company that fails to do so should be taken off the exchange.
U.S. regulators say stock exchanges should set rules that can trigger the delisting of Chinese companies. Concerns are that investors are being exposed to frauds. New rules will protect investors and create fairer competition. The proposed rules will give Chinese companies currently listed in the U.S. until the end of next year to comply. Firms seeking new listing will need to follow the new rules immediately. President Trump's financial markets advisors said in order to trade on U.S. stock markets, companies must grant American regulators access to their audit papers. Countries that are considered non-cooperating jurisdictions, or NCJs, will have to have co-audit from a U.S. government-named firm. Another safeguard is to provide investors prominent disclosure of the dangers of buying stocks from NCJs. China has refused to allow the auditing of Alibaba, Baidu, and other companies on American stock markets. Recent high-profile accounting scandals at Luckin Coffee have brought attention to this issue. China's accounting firms, including affiliates of giants like Deloitte, Ernst & Young, PwC, and KPMG, have long argued that Chinese law bars them from audits, the premise for this being that they may include state secrets.
Curtis Ellis, policy director over at America First Policies, has been researching this topic for many years. I caught up with him earlier. Curtis, great to have you on the show. Thanks for taking the time.
Certainly, great to be here.
Curtis, just how big a problem is this for Chinese companies listed here?
Well, we've already seen some of these companies take a huge hit in their stock price today. This is pretty big. It's been a major source of revenue, or major source of funding, if you will, if not revenue, but funding for these companies and for the Chinese Communist Party, having their stocks and their companies traded on New York stock exchanges. And as we've seen in the past, it's been a route for fraud, for defrauding American investors. So not being able to have their companies listed on the stock exchange is a major, it's a major step. It's a good first step.
And on that point, we hear the Trump administration talk about transparency, protecting American investors. There are some analysts as well who are saying that this will actually limit the Chinese Communist Party's access to the all-important American dollar. What do you think of that?
I think that's the goal of this entire program now we're seeing with the Trump administration, first targeting TikTok, then targeting Tencent and WeChat, and now taking the broader view, the broader approach on all Chinese companies have to open their books and abide by the same laws that American companies are required to abide by if they're going to be listed on American stock exchanges. We also saw earlier that the U.S. retirement funds, the thrift savings plan, the 401ks for federal workers and active duty military, those funds cannot be invested in Chinese companies for many of the same reasons that they've taken this step, that the administration has taken this step on these Chinese companies. These companies are opaque. We don't know if they're honest. We don't know if they're really making money. One thing we do know is that they're funding money to a regime that is absolutely hostile to our interests. So cutting off funding to the Chinese Communist Party entities disguised as private companies — there are no private companies in China, as you know — is a very important step. And this is a way to restrict their access to capital that they need to survive and that they're using to expand their reach around the world.
One thing I found very interesting, just as you mentioned, a lot of the stock prices for these companies have fallen today after the news. I was thinking about from the investor's perspective. If these investors, obviously they invested in the companies because they thought they were sound investments, even though we've seen things like Luckin Coffee was a fraud, we have other short sellers who've called out other companies as frauds. Why do you think it is that these investors now have said, okay, since you have to investigate their books, we don't want to hold on to their shares anymore?
Well, maybe some of these people weren't aware that the books weren't open. They have investment financial advisors or passive investments in these companies. There hasn't been a whole lot of attention drawn to the fact that these companies are not being held to the same standards as American investments, American companies. Look, American security markets have been considered the gold standard for the world because of their openness, because of the fact that they're regulated. The fact that these Chinese companies were not held to the same standards as American companies is scandalous. It's the result of a memo of understanding that the Obama-Biden administration made a few years back. They gave these companies an out, and in the hope, in the pipe dream, that they would come around and voluntarily start complying at some indeterminate point in the future. And as we know, as we've seen time and time again with the Chinese Communist Party, these are empty promises. They never live up to the agreements. It's all talk, 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 later, and tomorrow never comes.
Curtis, I appreciate your update as always. Thanks so much for coming on.
Thank you for having me. It's a pleasure to be here.
President Trump has sanctioned 11 Hong Kong and Chinese officials, including Hong Kong leader Carrie Lam. It's in response to Beijing's national security law, which undermines the city's freedoms.
The Trump administration has sanctioned Hong Kong leader Carrie Lam and 10 other officials for undermining the city's autonomy and freedoms. Of the 11 sanctioned individuals, 6 are Hong Kong officials, including current current and former police chiefs, and security and justice secretaries. The other 4 are Chinese officials. The sanctions freeze any US assets the officials possess. It also bars Americans from doing business with these individuals. The Trump administration said Beijing's national security law imposed on Hong Kong has heightened authoritarian control. Secretary of State Mike Pompeo said the law supposedly safeguards security, but is in fact a tool of repression. In recent weeks, pro-democracy advocates have been charged for violating the new law, including Joshua Wong, who was disqualified from elections as a result. Among the Chinese officials sanctioned is the head of the new National Security Bureau in the city, Zheng Yanxiong. The bureau is based in Hong Kong but answers to Beijing and is exempt from Hong Kong's legal jurisdiction. Treasury Secretary Steven Mnuchin said the United States stands with the people of Hong Kong, and we will use our tools and authorities to target those undermining their autonomy. Last month, President Trump ended Hong Kong's special economic status after the administration decided it was no longer autonomous. On the same day, Trump signed into law a bill that would sanction banks and officials involved in crushing the city's freedoms.
Trump is also banning transactions with Chinese tech giant Tencent and one of his messaging apps. But Tencent's influence runs much deeper than just mobile apps in the United States. It has major investments in large global companies across many industries, including Hollywood.
President Trump has issued an executive order banning U.S. transactions with Chinese messaging app WeChat and its parent company Tencent. The Trump administration has been ramping up efforts to purge untrusted Chinese apps from U.S. markets, calling Tencent, WeChat, and TikTok significant threats to national security. The order could potentially be a bigger deal than the TikTok ban. Tencent is one of the world's largest tech companies. It has ownership stakes in a variety of companies, including electric car maker Tesla, music streaming app Spotify, and social media app Snapchat. It holds majority ownership of the studios behind popular video games Clash of Clans and League of Legends. Tencent Pictures, its production company, is involved in major Hollywood movies like Wonder Woman, Venom, and the upcoming Top Gun Maverick. Tencent has a $1.5 billion deal with the NBA to stream its games in China. The ban doesn't mean that all these services will be terminated in the U.S. It's not clear yet what specific transactions will be covered, but doing business with Tencent just got more complicated, and many business deals are at risk of falling through. The order takes effect on September 20th. U.S. Commerce Secretary Wilbur Ross is set to identify transactions covered by the order. Tencent shares fell as much as 10% before recouping some of its losses in afternoon trade.
The International Monetary Fund says it's exploring all possible ways to support the Lebanese people. This follows the explosion that rocked Beirut. The country's central bank says the economic loss is in the billions of dollars, and it'll give zero-interest loans to people and businesses whose property was damaged. The organization also urged the Lebanese government to move on reforms. The government entered talks with the IMF in May after defaulting on its foreign debt. But negotiations have stalled over a lack of reform and disagreements over the country's vast financial losses. And still to come, Canada slaps tariffs on billions of dollars worth of U.S. aluminum products. This after President Trump announced he was reinstating a similar tariff on Canada. And Zillow exceeds quarterly revenue expectations as more home buyers go online. The company says it's at the forefront of a shift. That and more after the break. So we have a positive jobs report and the economy is slowly but surely improving. At the same time, debate over the new stimulus package seems to be getting nowhere. Talks between the White House and Democrats reportedly fell apart today. White House staff now asking the president to sign an executive order. So I wondered, is a new package even necessary? I asked Joseph Trevisani, senior analyst at FX Street. Joseph, great to see you as always. Thanks for coming on.
My pleasure. Thank you for having me.
Joseph, just how important is this stimulus package for the American recovery?
Well, I think it's pretty important as far as keeping consumption on an even level or even getting it to rise. It seems to be, though, that the things are starting to normalize, and you can tell by the increased amount of political rancor that this stimulus bill is causing in D.C. But I think it will pass, and I think it's probably a good thing. It is probably a necessary thing as well.
And how will things look if we don't see the stimulus package?
Well, the economy runs, as everyone knows, about 70% on consumption, on consumer spending. That's directly where this bill, the stimulus, will apply its funding. So you'll simply get a slower rate of growth. You'll get a slower return. You'll get slower returns of people to a lot of the retail and other businesses that need consumer traffic and can need consumer spending and can't replace their operational funding from the web, restaurants, bars, all of those things. I mean, the non-farm payrolls today saw a almost 500,000 rise in bar and restaurant and employment, which is a very good thing. That's the kind of thing that you want to keep moving.
And we hear some people saying that we've had enough stimulus, we need to not get into more debt. What exactly would the advantage be of not having another big stimulus package?
You know, in this election season, and we're approaching it very swiftly, almost everything that comes out of D.C. seems to be conditioned by the response of the electorate in November. If you're talking about debt considerations, it would be hard to believe that either party can say this seriously. Both parties, when in power, have presided over huge increases in debt. If the choice is between a certain amount of more debt now and a much longer and slower recovery, then I don't really think there's any choice, regardless of the true fact that we are adding an inordinate amount of debt over the past 10 or 15 years.
Do you think both parties will be able to work this out? Or we heard the president over the past few days at least saying that he may, do an executive order to pass some support.
I'm not sure how that executive order would work. Maybe the president is not really sure about it either. I think that the parties will come to an agreement on this because the last thing that either party wants, regardless of the advantage they're trying to gain through these negotiations for the election, neither party wants to be blamed credibly for preventing a passage of this bill. That enough will eventually be the key to getting this passed.
It's amazing this all happened in an election year. Who would have guessed? Joseph, I really appreciate your time. Thank you.
My pleasure. Thank you for having me.
Canada says it will slap tariffs on a range of U.S. aluminum products. This after President Trump announced the reinstatement of a 10% tax on aluminum imports from Canada. A Canadian senior official says the countermeasure will be in place by September 16th, 1 month after the U.S. tax goes into effect. The affected American goods total nearly $3 billion and could include aluminum bars and plates, household items, refrigerators, and other items. President Trump said the tariff is necessary because Canada was taking advantage of the United States. Canadian officials responded, saying it will harm American consumers the most. And real estate app Zillow beat quarterly revenue expectations by quite a bit. The company brought in $768 million. That's $150 million higher than expected. The company is coming out on top as shares surge and more home buyers use online tools to search for properties. Experts believe the company is best positioned to deal with the CCP virus pandemic's added difficulty. Consumers are looking for more spacious houses now that they're spending more time at home. They're also taking advantage of low interest rates. Options like virtual house tours make Zillow's features attractive for those looking to socially distance. But the pandemic has cut into profits compared to last year. Zillow's CEO sees the company as leading the industry into the future. And while many businesses have taken a hit during the pandemic, others have been booming. Some in real estate say that the virus is pushing younger home buyers out of the city and into their first homes.
This is what we're desperate for in the city.
For many young home buyers, COVID-19 is making the green space of the suburbs more attractive.
The value of the city to us was being around all the people, being able to go to all the restaurants and the culture, like the museums and the plays and everything. And so you remove all of that, it's difficult to justify paying the rent, being in a small confined space, and having no access to being outdoors by yourself.
First-time homebuyer applications jumped 20% in June compared to that same month the year before, according to CoreLogic, a company that analyzes business statistics.
We're based in Darien, Connecticut. So in the first 6 months, which is really incredible when you think about how much business was not being able to be done during the pandemic, Fairfield County as a whole did about $2.36 billion in sales, and that's 12% over the same period last year. And even better than that, if we're just looking from the end of June to the end of June, pending sales are up 49%. It's really skyrocketed.
I think the majority of what we've seen are people that have been considering moving to the suburbs from the city, and it's really kind of been the nudge that's got them to the burbs, just with everything going on in the pandemic.
And still to come. With support from the community, one New York City restaurant finds a way to survive the pandemic closures. Find out more after the break. One New York City restaurant is surviving with help from the community. The owner's landlord has helped him, and his food suppliers have worked out a new deal too. The restaurant gets more business from locals who come to enjoy the outdoor seating. Our reporter Kevin Hogan has more on how Bordeaux is staying in business.
What would normally be a lively bar restaurant in the heart of Hell's Kitchen is now closed to customers dining in. New York City does not yet allow diners to eat inside restaurants as it works to reopen safely. The pizzeria had been closed since St. Pat's Day and reopened for outdoor dining in June. Bordeaux's owner, Nick Verses, says he's received a lot of support from the community and he's going to stick it out for the long haul.
We like the value proposition that we have. We like the neighborhood that we're in right now, and we're going to give it everything that we have to try to survive.
When it's busy, they have about half the customers they used to have before the pandemic. He's had to furlough a lot of employees, and his workforce is at about a quarter strength. His PPP loan helped him offset half his payroll and rent, but beyond that, the community has given him a pivotal helping hand.
People take for granted, but a lot of people are out there to try to help one another out, right? This is a partnership that we have with our suppliers, our customers, and everybody else, and we try to do everything that we can for our customers and delight them. And our suppliers are trying to do the same thing, and our landlord to try to help us out to make it a go.
When this gourmet pizza joint was closed, the invoices for food supplies just lingered. Now his suppliers ask that he pay cash on delivery for new shipments and pay down his past invoices over time. But with any challenge comes new opportunities. Versus says more locals are discovering his restaurant, and now he services the neighborhood. Bardo used to rely heavily on tourists and people going to see Broadway shows, but now they're not around. So the owners on Restaurant Row petitioned the city to close down the street during the day, and this has brought in a lot more foot traffic from the neighborhood, and it's created a nice gathering spot for diners, which has brought more business to the restaurant. Reporting from New York, Kevin Hogan, NTD News.
Bardo offers a discount to military members and first responders. And that's the latest business updates for this week. Thanks for tuning in. Have a great weekend. We'll see you on Monday.